Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of Wall Street speak, and today we are looking at Fortress Biotech Inc. It's recent 8K filing, and let me tell you, this one has a bit of a twist to it because it is all about a drug approval process that has been a bit of a roller coaster. Before we dive in, if you are new here, make sure you subscribe because we break down these sometimes dry corporate documents into plain English so you know exactly what is happening with the companies you invest in or are just curious about, and if you want to join a community of fellow corporate detectives discussing these filings, head over to our Discord server linked in the description below. Alright, so what is the big news today? Well, it looks like Fortress Biotech Inc. is letting us know about an update on a new drug application for a treatment called CUTS-101, which is meant to help young kids with a rare disease called Menkes disease. This isn't the first time we've heard about this drug, though it sounds like there has been some back and forth with the FDA. This filing pops up on the 14th of November of 2025, and it is talking about a big step in getting this drug to patients. Remember, Fortress Biotech Inc. is the main company, and they have a subsidiary called Cyprium Therapeutics Inc. Now, the story gets a little more interesting because a few years ago, in December of 2023, a company called Sentin Therapeutics Inc., which is owned by a larger company, Zydus Life Sciences Limited, took over the job of developing and selling this drug from Cyprium. So fast forward to November of 2025, and Sentinel has just told Cyprium that they have resubmitted the new drug application for CUTX-101 to the FDA. Now, this is pretty important because even though Sentinel is handling the drug itself, Cyprium still owns something called a priority review voucher that is a pretty sweet deal because if the drug gets approved, Cyprium could get royalties and even up to $129 million in payments based on how well the drug does in development. And sales, this is a big deal for a company like Fortress Biotech Inc. because it means they could still see significant financial gains even if they are not directly developing the drug anymore. Now, this filing is a Form 8, which is basically a way for companies to tell the public about important events that are happening right away. It is not a detailed financial report like a 10Q or 10. But it does give us a snapshot of key developments, and looking at the basic company information we see, Fortress Biotech Incorporated is based in Delaware and its stock is traded on the NASDAQ Capital Market under the ticker symbol FBIO, and for their preferred stock it is FBIOP. This is interesting because it tells us they are a publicly traded company and that their shares are available for anyone to buy and sell. Their common stock is listed on the NASDAQ Capital Market. This means they have to follow strict rules set by the Securities and Exchange Commission, or CEC, and keep investors informed about what is going on with the business. The fact that they are reporting this drug update means it is a material event, something that could affect the company's value and impact investors' decisions. Now, while this 8K filing doesn't have the super detailed financial tables that we might see in other reports, it does indirectly point to the financial implications of this drug development. It gives us a glimpse into the strategy of how Fortress Biotech Incorporated is working with other companies to bring potential new medicines to market. The fact that Cyprium Therapeutics in Core Parated retains ownership of a priority review voucher is a key part of their strategy for leveraging assets and potential future revenue streams without carrying the full development burden. This is a smart move to try and monetize their intellectual property while sharing the risk from a business strategy perspective. This whole situation highlights the complex world of pharmaceutical development. Companies often partner up or license out their drugs because the cost and risk involved are immense, especially for rare diseases. With rare diseases, the patient population is small, which can make it harder to recoup development costs. However, if successful, the drugs can be very valuable. We see here Fortress Biotech Incorporated is trying to make sure they benefit financially from this drug's potential success even after handing over the reins to Sentinel Therapeutics Incorporated. Looking at the broader picture, Fortress Biotech Incorporated operates in a highly competitive and regulated industry. The success of a drug like CUTS-101 hinges on many factors, including FDA approval, patient adoption, and competition from other treatments. The fact that the new drug application had a complete response letter, initially meaning the FDA had concerns, means there were hurdles to overcome. Resubmitting the application is a positive step, but it does not guarantee approval. The real financial impact for Fortress Biotech Incorporated will come if this drug is eventually approved. And the priority review voucher is utilized. This could lead to significant milestone payments and royalty income for the company, which would be a major boost to their bottom line. In terms of risks, the main one is naturally FDA approval itself. If the drug is not approved, the company's investment and potential earnings from this specific product will be significantly impacted. Also, market research. Tiveness and the cost of treatment will play a role in its commercial success. The previous complete response letter indicates the FDA had questions on safety, efficacy, or manufacturing Socental Therapeutics Incorporated, and Fortress Biotech Incorporated will have to have thoroughly addressed those concerns in the resubmission. Now let's put on our investor hats and think about the potential here. The company is playing a long game. It is not about the immediate cash from this filing, but the potential future revenue streams that could be unlocked. This is typical of biotech companies. They invest heavily in research and development, with the hope of a big payoff later. The $129 million in potential milestones and royalties is a substantial amount that could significantly change the financial landscape for Fortress Biotech Incorporated and its subsidiary Cyprium Therapeutics Incorporated. This filing is a snapshot of ongoing progress in a long and often challenging drug development process. The key takeaway is that the pathway for cuts -101 is still active, and there is a significant financial upside for Fortress Biotech Incorporated tied to its eventual success. It shows a strategic approach to managing drug assets and partnerships in the pharmaceutical industry. So what is my take on all of this? Fortress Biotech Incorporated seems to be playing a smart strategic game by partnering up to develop drugs, while the initial setback with the FDA was not ideal. The resubmission shows resilience and a commitment to pushing the product forward. The financial rewards tied to the priority review voucher are substantial and could be a game changer for the company. The main weakness or risk here is simply the uncertainty of FDA approval and future market success, but that is inherent in the biotech industry. Overall, it looks like a company focused on long-term value creation through strategic partnerships and disciplined asset management. They are not taking on all the risk themselves, but are structuring deals to benefit from potential wins. Alright, that is our quick decode of this Fortress Biotech Incorporated filing. What are your thoughts on this drug development update and the potential financial implications? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more dives into the world of corporate finance. And don't forget to join us on Discord, linked in the description, to keep the conversation going. Thanks for watching, and we will see you in the next video.